Hey, what's up YouTube? It's GMAC, another video. Gonna show you a trade I just took in the Asian session. Trying to get my funded account back. As you can see, I pretty much know how to exactly what to set my target to get it in 2 days, and I've just been doing it a while. It's not something you should rush or anything, but I'll show you where I entered. See, that way you can see the time. Uh, I accidentally hit long and got out real quick and went short at 8:16. So we will go to a 1 minute chart and I'll show you what I was looking at here. I missed this right at the 750 to 810 macro. You can see institutional order flow entry drill. This is a fair value gap. This 3 candle formation, 1, 2, 3, taps into it, 8 o'clock, boom. So 8:16 is here. I get in at the top of the fair value gap. I took no drawdown. Targeted what was it, 15, 16 points, so down to 60. I got out right around this area here. Yeah, this candle shot through and it just kept going. With the top step, I was using five contracts, 50 micros. It's over leveraged. I don't trade like that on a funded account. I just try to pass these real quick. I just saw that we gapped up and come down, and this is 2 weeks ago's high, and since we hit it here, that's the institutional order flow entry drill. We hit that, boom, so we're bearish. Okay, I went to a higher time frame. I went to a 15-minute and looked, and that is right here, and we had already took out this, and I was thinking maybe we would go a little bit lower, down to here, maybe this level here. There's a lot of liquidity under here. Down to here, I just thought we had some room to go. I could have been wrong, but we were right. So I said, well, if we retrace, I like to see manipulation. So I saw this, a fake run down, then we went above it without closing it in. And as this candle was going down, I got in. It was a very good trade, and we're back on track. So this actually counts towards tomorrow too, so I won't be trading tomorrow, but I'm going to show you a trade for I can't pronounce your name right, Neomus or whatever. Let me show you what I was talking about this morning on I actually use this chart. I've been executing on my phone. I like looking at the TradingView chart better, but basically what I was looking at was we wasn't even strong enough to reach this 15-minute fair value gap. So I knew we was weak. I figured we had took out these lows, and I was thinking half of this wick. I did a fib from here to here to get the midpoint of that wick. And I've got my thing messed up on here, but anyway, that was my target, and we had plenty of room, so that's why I went ahead and went with that trade. If we go below that midpoint, that's fine, but if we start to reverse, I think we would reverse from that midpoint. So that level is 2046.75. It's looking like it's going there now pretty aggressively. that's usually what it does when we take buy stops and turn buy stops or sell stops into buy orders. So let's see if we bounce off this level just for schnots and giggles. But what we was looking at this morning while I was at work was, okay, we're in here. This fair value gap right here, right at 9 o'clock, you got the 8:45 candle, 9:15 candle. Makes it fit on the 15 minute. It also does it on the 5 minute. But that's another institutional order flow entry drill. Next candle up, trades up into it, comes slamming down, all the way down. 2014. You get in right here. I mean, that's a 100 handle move in a matter of, let's see, let's go to a 5 minute chart. So we go, we make this fair value gap up into it. But what I liked, we were digging into the bottom of this new week opening gap with a bearish fair value gap. So that was super confluence for me. I wasn't trading, I paper traded it. And in 5, probably 7 minutes, we go 100 handles, and then boom. Let's see how much liquidity we took out here with that. This we take, oh yeah, see we went under all this right here. So you see a big wick like this, after we already tested it on the way back up, I figured we was going to take out at least this high. I thought we would take out these highs, but we didn't, and we just kept going lower. But that's kind of how I use confluences, especially with the 9:30 open. I don't really trade right off the bat like that, but if I was to see that, I would definitely hit that up. Or what you could do is wait on it, and on the way back up on the 5 minute chart, had a great buy right after we see, we make a swing point, we make a swing low, we take out we make a 5 minute fair value gap, institutional order flow entry drill, boom. You could have targeted these equal highs since it was the top of this gap. It actually ran this one. I thought it was going to go up here, but it didn't. But just say you got in here, which that's a big fair value gap. It's hard to get in those. I get it, but basically what I do is I wait for this candle to start retracing and close, and as the next one starts pulling away, I get in, give it 10-15 handles drawdown room, and for these highs. So if you did, just say you got in here at 113 and you got out right at these highs or at the top of this gap, that's 50-60 points right there. That's what we need. So that's just a couple examples of how I look at order flow. And here's another 5 minute fair value gap that's respected. If you took this one, you're at 165 to this high is 203. That's 38-40 handles. That's all you need is 130, really 20, 30, 40 handles a day. Especially if you have multiple accounts. I mean, you could really just go 10 points a day if you had 20 Apex accounts. But I'm looking for 50 points a day. That's what the range I like to see. That way I can get half of it. I like to be able to hold longer, but if I can see a 50-point run and try to take 20 to 30 points out of it, that's what I try to do. And that's the 2 examples I wanted to show you and kind of how I look at things. I'll try to post another video about Dylan ranges and how I use dealing ranges in my trading. But basically, just to give you an example of what a dealing range is, we'll go back, we'll do a replay. Oh, we don't have to replay. I'll just show it real quick. Oh. It's basically, we took liquidity here and here. So say this wasn't here, your dealing range would be from here to here. So this would be discount, this would be premium. As you can see, we come down into a discount and we come back into a premium. I like how the bodies are respecting the top of this fair value gap. That's why I thought we would be bearish. And then when we come down below it, as soon as we tap the bottom of it, we shoot down, and that's just, I thought we might get down to the midpoint of this wick. And what was that level? And pretty pretty close to the midpoint of that wick. I mean, if that holds, but if that forms a swing low, which it looks like it's going to on the 15-minute, that's how precise you can get with this. With ICT, I see us, trading back up into this maybe fair value gap, or I don't know. I'm done with it for today. That's just kind of how I look at it, how I use the different PD arrays. I'm trying to get better at using order blocks. I use fair value gaps mostly, swing highs, swing lows, and the new week and new day opening gaps. I like order blocks. I think they're very powerful. I just my PD array of choice is the fair value gaps or the new week opening. All the gaps. We love the gaps around here. All the gaps are mine, baby. But good luck. I love y'all. I appreciate you. God bless you. If there's something you need, or whatever, we can live stream and have people in here and have Q&A or whatever. It don't matter. We're just all trying to get better together. I'm glad I finally got back on the right track. I'm not rushing it. Just one day at a time, looking for a good setup and going for the kill. Have a good day. And as you can see, I'm a paper trade demon. I wish I could replicate this on my funded account, but we're going to, for sure, in Jesus' name.